All right. So welcome to another Charts and Chat. And I did see the action today from the FOMC. I know that the rates were unchanged, so uh, the market had a very mild reaction at the beginning. Then a little bit of a push. I wouldn't say that that was a really big push, but it is a pretty large candle for the daily compared to what has happened the last 3 days. It's nothing out of the ordinary. But let's see where we at on the chart. So I'm gonna pull up first ES instead of NQ. Hold on. Yes, we're gonna start off with the S&P 500. So at the beginning of this pullback right here, whenever we had this first green candle, we started betting up higher. As for the VIP room, we were looking for places for the market to reach higher, which we got all of the objectives from this move down, all the way to the 618, 65% retracement on today's session. Once it went above, the aim was for the fair value gap on the daily, which got filled and plus more. So the question is, how high can we go, and when can we turn around on this chart? As usual, we're gonna go and anchor now that this leg down has crossed above the 65% retracement. We're gonna be looking at this on a weekly perspective to anchor our next fib, which is basically gonna be, hold on, let it load. All right. Basically, it's gonna start from the last lower high that we have on the chart to the last lower low right here, and we're gonna expand this to the daily right here, and we're gonna see basically it's gonna be at the highs of this candle into the lows of this candle. So something that I find very interesting on this chart is that the 50% of this drop is aligning with the daily 20 MA. So that's basically where I kind of, if you think that the market has downside, if this is only a reversion to the mean for a lower high to then come back down lower, we should be hitting this point right here, hopefully as an overnight high, and then reverse back down. That's my trade thesis, right? If we start closing like hourly candles above this, I start trading higher. There's gonna be a level right here that we're gonna watch this equal high, but eventually, like once you cross the 50% retracement from a drop, you're most likely gonna be hitting the 618 or even up to the 65% retracement. Now that's very likely to happen. I like the market to turn around right here. That'll be the best ideal for a very sizable leg down. But the possibility is there that we trade up to the 65% retracement. And the reason is, we also left this fair value gap between these two candles. So we're just gonna paint this yellow, I guess, so we can see it. So that's an inefficiency on the sell side up to from this whole leg down, right? You can see that there's no inefficiency from this high, from this low to this high right here, but from this other one, right, we're pretty much far apart. And going up to the 65% retracement does not fully fill the gap. It does not have to fill completely, but to that point, the inefficiency is mostly fixed. It's mostly fixed. So um, if the market trades higher into that point, I'll consider that there's areas to short around this level, which is 43.2250 up to this level right here, the low of this candle, which is for 43.30.75. So I still favor a lot this, and the reason is that I favor pushing to the daily 20 and then rejection is because a lot of the times whenever we have mean reversion, let me see if I can go back to a couple of years, 3 years, something where the market was on a that it broke the uptrend into a downtrend. So something probably like this, right? Like we broke the downtrend, we trade into the mean reversion, and then drop, which I believe that also aligns. Just going by this example, something around the lines. 50% retracement, daily 20 MA, mean reversion drop down. Let's see this other example that is near over here. Oops, come on. Another one right here, from here to here, roughly daily 20, 50% retracement around that area, and then drop back down. So we're looking at something like that for this one to happen. I don't know, right? I could be totally wrong, but that's my takeaway from the market, that could be happening. Seasonality speaking, it's not a typical November. A typical November will go will push a little higher slowly and then the Santa rally, right? That's just seasonality. But the I think when you look at why seasonality works and why are the reasons that sometimes the market dumps at the end of the year or rallies at the beginning of the year, just like last year, is mostly because of tax reasons, right? Whenever you are on a losing position at the end of the year, you kind of want to harvest the tax loss, right, against your winners. So you cannot take that loss and then rebuy at the beginning of the year, thus creating a rally. Is what we saw last year. So whenever something has a downtrend into the most of the year, you'll sell it at the end of the year to get that loss in your for your taxes, and then harvest it, and then the next year you buy back in if you want to be in the position, right? And I don't have the picture for you, but if you go to the performance on a yearly basis of what the sectors have been doing throughout the year, you'll notice that, let me see, you know, you'll notice that the only sector that is up for the year is technology by 30 something percent. But the rest is down. So I believe that the rest of the sectors may sell. Maybe not technology, though that's gonna create a little bit of a down pressure on the market. But technology has so much weight that if it doesn't drop heavily, the market may just chop into the end of the year in a range. If it makes any sense, okay. I know that like just technology is super strong. It's too much weight. Is most likely not gonna sell that hard. But for seasonality, tax reasons, and everything, we might see some sell side on the other sectors that are not, because financials are down. Actually, financials are kind of flat to down, I believe, on the year. Let's actually look at them real quick. We got time, so we're just gonna take a look at the daily, expand that out. Just gonna take a look at just the sectors are as they're up on this list. XLK. Where's the beginning of the year? Where are you? Okay, right here. The beginning of the year is marked usually by a dash dotted vertical line right here. So you can see where XLK was at the beginning of the year, where you can see it right now. That's an increase of roughly 35%. That's quite a bit, big performer today. But if you look at stuff like, let's say the next one on the list, this is communications. So communications at the beginning of the year were down here. They're up as well. They're considered also like, I guess like when you look at the Qs, also another 33%. Let's see, utilities. Utilities started off right here. They're down roughly, this is a rough estimate, 14% down on the year. Discretionary, where are you at? Discretionary started off right here. They're up on the year. That's gonna include you. This is mostly driven by Tesla. 19% up on the year. Financials, just look at that. They are down roughly around 6.5% on the year. Real estate. Real estate is down about 11.38%. Healthcare Healthcare is down 8%, down 8%. Industrials, oops, let me get rid of this. Industrials are flattish, down 0.64%, so that's kind of flat, right? Materials, XLB materials are down. Where's the open? I'm sorry, right here. The yearly open, very flattish, -2%. And energy is very interesting because energy was up a lot, then down, then up. So energy is looking like it's flat from year to year, -2%. One of the bad performers of the day. Look at that. And consumer staples down on the year as well. Let's look at this real quick. Start of the year right here. They're -9%. So you notice that the ones that are up on the year are basically technology, communications, and that's it, right? And discretionary, which are components. It's basically the components of the QQQ. Not discretionary, but Tesla is. Tesla is part of the discretionary, but you'll see stuff like GM, Ford. I don't know. We can see a list right here. Right here, XLY. Where you at? Discretionary right here. Caesar's Palace, Dollar General, Domino's Pizza, eBay, Etsy, Ford, GM, GPS's Gaps, I believe. Hasbro, Home Depot, Lenard, Las Vegas Sand, Marriott, McDonald's. So discretionary, it's still up on the year, which is, I think, is amazing to me. But Tesla's a big component of it. I thought it was gonna be down on the year. But yeah, yeah. Basically, you're gonna see all this plus Amazon and Tesla. You know, a lot of discretionary stuff, and then Amazon and Tesla. And Amazon and Tesla have a lot of weight on this sector, and they're part of the QQQ. So QQQ being up like that on the year makes sense, right? It's just how technology ran. But like I said, going back to what happened last year, the losers went even to be bigger losers into the end of the year, and then they start getting bought up at the beginning of the next year. So I kind of see that happening this year. So I'm looking for further downside stuff like consumer staples, energy, possibly financials are flattish, but could be, and utilities, and then they could rally at the beginning of the next year. So paying attention to a lot of that. If the same thing's gonna happen, right? From last year. All right. So um, going back to the features analysis, that's on ES. That's what I'm looking for. I thought we could reject this area today. You know, I got some puts actually at this area. So I was looking at this lower high to be resistance. I was looking at the 32 retracement, but it's fine if it goes back to the daily 20 and then drop. It's still gonna be a winner. We'll see. I know my risk, but so I'm not looking forward to this. I'm looking that this bounce could be just a counter trend bounce to drop again, and I think it aligns with Andy, which is another VIP host, that he's also looking for that as well, for around that same area on SPY. He did his analysis on SPY. So let's go to NQ, see if we see something similar in there. Let's see, Nasdaq. Come on. All right. So we have about the same anchor right here. You notice. This daily candle closed at the daily 20 MA, so I would think that this was gonna reject, but we can already see that the market is flirting with the 50% retracement from that last drop right there. So it's around the same area, not a very exact rejection so far, but it is considerable that same area as well. Um, the inefficiencies that we see on this market are basically up to this point right here on regardless fair value gaps. It's only up to this point and going up to the 618 fixes by a little bit. I would call it like going into the 618 and poking about this high and then rejection. I think it's a call for liquidity. Buy side liquidity I'm sorry, sell side liquidity that got formed through all this and gets taken out after this high. I consider that very bearish, right? If we go up, if we go up into the next sessions into a 618 and they start rejecting heavily like this, then I'll be looking for big shorts that will take us into this other inefficiency on the buy side, or even go for a greater lower low from this. Okay. Oops, to the chart. No, I'm looking to the chart. All right. So far, I'm looking at this weekly chart. Um, it looks kind of bullish. I mean, it's by Wednesday. We take out this high, depending on where we close this week. But if we end up closing this week about the 6.5% retracement by any reason that the NQs go even higher, that's gonna be very bullish for even the next week to come. But I don't think that's the case. I just don't buy it. I still think we're gonna hit a lower high. One of the other reasons that we do think about this is because when you look at SPX expected moves for the week on options, you tend to stay inside the range. Or if the market's gonna go crazy to the upside, at least bet to a 2 sigma move. But being above the expected move for the week like this calls for a possible reversal to be back into this area. As you can see, this green line is the top of the expected move to the red one to the bottom of the expected move that we can see right here. So I think that the market, going, like I said, daily 20 MA on the cash session like this and start rejecting that. That's what I'm looking for the next sessions. Don't put it on stone. I may have to flip my bias, but that's what I see right now. That's why I see right now the market is too extended to the upside from this move. Things go accordingly. This thing should go back. Should go back over here. Well, that's a big break from it. Actually, I want to see how many points. The expected move supposedly was around 96 points last week. This is only 80 points, so I'm thinking that the expected move that was set on Friday was around this area. So at least the market is still extended from the expected move up to this high. So I'm thinking that it could go back down from that area. We got 2 trading sessions to do that. We'll see if it does it. Any question, guys? Or any questions? No? Then moving on. That's all I got for the futures analysis. I was gonna touch into the bond area because we're having a possible bounce. I'm still looking. I don't know if you guys remember when we made this bounce. I was calling for another drop because I thought this bounce was only going towards a mean reversion to then drop. There's two ways whenever the price is overextended from the daily 20 MA, which is the red one right here. The market either is gonna retrace in price or it's gonna retrace in time, which is basically what we're looking at this area right here. So I think if the bonds is still gonna continue going lower, they gonna retrace, basically retracing in time sideways to hit the daily 20 and then possibly go back down. I see the increasing volume at the lows, right? But this is possibly a bear flag to then go back lower. I'm gonna be cautiously about thinking that this is gonna go higher on bonds. Because you have to think that the trend is lower until proven otherwise, right? So I'm looking for this to be a possible bear flag to come back down later. And I just want to see if it lines up with the idea of the yields going higher. Because honestly, I don't think that I don't see signs for this to be a top right here. No, to be a top like a long term top. I don't see the signs of it. I don't see the immediate lower high. If anything, I see a series of higher equal highs. I don't see divergences on the chart. Significant divergence on the chart. I don't see it. I just see a pullback into a mean reversion. And if the weekly, let me see what the weekly is doing. The weekly is still extended, to be honest. So yeah, going looking at this weekly, I guess I can see a pullback into this area right here, or at least the weekly 20 MA. But the daily doesn't show it. Maybe the weekly does. So I'll keep an eye on it. I think it's very interesting that as soon as the yields on the 10-year yields were gonna hit almost 50, it just didn't make it, right? Almost 50. So it feels like it was a little bit blue balls left for not hitting 50 right there. What's up, Vic? You got your mic open. Thank you, man. So yeah, that's with the bonds. Like we pointed out on previous charts in chat, 2006, 2008. I'm sorry, 2006, 2007 breaking points on the housing market were around the 10-year yield being around 52 to 52 and a half. So I was looking forward for this to be keep trending higher to those levels. And I believe that the economy is a lot stronger than before. So the odds of breaking this and going even higher are I think not that the odds, I'm sorry. What I'm thinking is that the market, the economy right now can take a greater, even higher yields than this and still do okay. I don't think this is a breaking point again on the chart for housing markets, for any markets, right? I think actually the yields are gonna be a higher point than that, but the really I don't know where that breaking point will be. That's up to the market. First of all, we have to get there first, right? And we see a little bit of signs of turnaround. So we have to see. I think the next two candles on the daily will decide if we start losing the uptrend on yields, downtrend on bonds, or if we start gonna switch the path of it at that point. And remember that bonds have been selling off all year, right? So, and going back to the when are you gonna harvest losses and all the stuff on your investments is usually at the end of the year. You wanna book those losses so you can claim it as a as a loss on your taxes and not have to pay that much for the ones that are you're gonna be booking for gains, right? So like I said, since it's been on a downtrend the whole year, I expect further downside on bonds throughout the rest of the year, which is not a lot. All right. So any questions, any suggestions, or anything that you guys want to throw at me now that we cover futures? Because if not, I'm gonna try to do a a little watch list for tomorrow. See, we can trade today. The watch list was 3 out of 3 plays, so it was good. We played today in the VIP for people who are not in. We played today XPEV to the upside. Actually, all of the plays were to the upside. XPEV, we got it around this area, and you can see what happened, what it turned into. Uh, oh no, I'm sorry. We got it around this area. It pulled back a little bit on us, and then it went into our favor as around. Um, I still have 3 contracts on this, and then we also play LI, which is basically Chinese EVs, right? But I saw the setups. It's a classic setup that we use on the VIP. This morning gapper into priorities highs after a bearish candle. That's basically it. And LI was a better gainer because I actually waited for the entry. We enter LI around this area, saw a little bit of pain, but then it turned out to a favor for like 80+%. So that was good. The contracts move a lot better. So I'm gonna see those I cannot give you a list, a watch list for those type of plays right now because those they show up on pre-market, right? We know what the setup is, but on pre-market we cannot see that. And we play also DBM to the upside. We did okay on that one. It wasn't a big gainer, but that was a what we managed to have was a very good entry. Was around this area, and we ended up closing some of the longs around here, and then it turned around to the downside. But that was a play on energy. I thought energy could go up today, and ended up being one of the worst performers in the morning. I mean, I'm sorry, on the session of today. But regardless, we made some gains on that name. Mm, so I don't see any suggestions or questions. Now's the time if you guys want to do it. Um, if not, let's go down to the scanner and see if we can find anything of inside candles that are well positioned on the daily that we can that we can take advantage of. We can look at the only one that I recognize here. I recognize them all, but the only one that I can see that has good options on the options chain is basically RCL. That was the only one because the other ones probably don't have any liquid options. RCL does, right? So as any inside candle we see on the daily, we're gonna put an alert at the extremes of the highs and the lows of the candle. Set up alerts. I favor the downside trade. I favor the downside trade. If the upside trade comes in, I probably gonna skip it. It depends on the pre-market. If RCL opens at the highs, I'm probably gonna take it long. If RCL opens at the lows, I'm gonna take it short. But I'm gonna see if it breaks this whatever inside candle is right here. The problem with the inside candle setup is that it might only go very little up or very little down. There's not a lot of setups, but the reason I think the downside has a much, I think actually both setups have a lot. That you can see the compression pattern right here. So what we're looking for is some kind of expansion, like let's say into a daily 50 MA that will hit the top of the range from this consolidation area, or a rejection of the low that will take it into a bear flag break, right? A little whenever you see a staircase up, 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 and it gets higher, starts going up, then you see a major breakdown, right? And taking the levels as it is, right? Aiming for the first 82s and then going all the way to 80. But that's the idea. I think this setup offers both sides to be playable. So I'm gonna be looking for this compression that is having right here on these three candles to be an expansion for this other candle outside. I mean, I'm gonna keep my expectations as I should, right? But that's what I'm looking for. I'm just gonna put this on the list right here for tomorrow. RCL. Next up, let's look at the scanner. Like I said, I don't. There's other no names. Whirlpool, Well. I don't know what the Well is. They don't have good options. They don't have. Double inside days are my favorites. BTRS, but it depends on the charts. BTRS. I'm sorry, BTRS. But I believe, I mean, this is a sub $10 stock. It's not gonna have good options, most likely. Let me see. Yeah, whenever you see something that has monthlies and it doesn't have weeklies, most likely it's gonna be not liquid, right? Open interest is not that bad, but if you look at the options, 5 cent spreads, so you need to go up 5 cents to make some money. I mean, it's not bad, but you're covering if you buy monthlies, which are 16 days out, you'll be dealing with the IV of these. Well, I don't think it's a good place on the chart, so we're gonna move on. The double inside candles are usually, or even three inside candles, are usually my favorites, right? Because the compression is just compressing, 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 and then boom, you get expansion up or down. Just for shits and giggles, I'm gonna put an alert, but I'll probably do something that I haven't done in ages, which is playing shares and plays with some shares. right? Moving on. Let's go down to the two down, two up strat reversal. So two down, two down strat reversal is on Starbucks on SBucks with a hammer daily candle. So we're gonna see if that looks good. SBucks. Okay. So at two down, meaning this is a down candle that breaks the lower end from the prior candle, and then another one that breaks from the prior candle. Oh, forget about it. Earnings tomorrow morning. Okay, forget about it. This is gonna have earnings, so sorry. It's a good setup. If there was no earnings, breaking this high will take you to even higher prices. So on this setup, right? Whenever you come down like this, you have a hammer candle like this. You break up this high. You have a little gap to fill, but then you can even start thinking about a reversal candle, something like this, right? Something like what it did, right? Like this. But this is gonna be an earnings reaction move, so I'll keep it and watch. But I don't trade earnings. You guys know me. I don't do drugs. Well, I don't do earnings. Um, KMX para. Let me see. KMX. I don't know how the options are on Carmex. I see. Look at how it reached it. Remember that we talk about this one right here, that we said there was a good short area, and it ended up going up the way to 50% extension. So that was a massive winner from that time that we spoke about it. But right now, what I see, it's a consolidation support right here that has a hammer candle. Could have a reversion to the mean, a little push into the daily 20. I can see that happening. And this is a $60 stock. So if he has good options, I can see a possible upside candle above this. Come on, where's my alert? Right there. So I'm gonna place some levels. I'm gonna add this one to the watch list. Hopefully it has good options. Let me see. It does have somehow good options. This is a 15-cent spread. That's not good. But if it manages, like this is a 10-cent spread. Okay, 10-cent spread. So we could play next week's for a 10-cent spread instead of having a 15-cent spread right here. We could play next week's, but the big gains are always on the weeklies, right? And let's say by any chance we do go into the mean reversion into the 32 or the 50%. Let's say 50% retracement, which is 64.39, and we can get a 63 call in the money before Friday in two trading sessions at 15 to 20 cent contract. 63 can make it here to a dollar. Okay, I can see it. So I'm gonna add KMX to the. It's not ideal for options with the spread that it has, but I like it that if it manages to have a good candle that does have out of the contract money into being in the money for a whole dollar in the same trading session, that's gonna be a lot of gains right there. So we're gonna put KMX right there on the list, and we're gonna check Para right now. Para. Earnings coming up and sub $10 stock, so I'm moving on to the next one. So this list that we saw right here was the bullish new daily news, daily candles bullish, and we're gonna look at the daily candles bearish. The same setups are on the bullish and the bearish. What makes something bullish versus bearish is that it's the month is green or is red. Now today is the first day of the month, right? So I mean, whatever was green today is quote unquote bullish, whatever is red today is quote unquote bearish, right? Which is not, but that's what the scan is running into. PVY, CTVA, LLY, McDonald's, Triple M. Okay, let me see. Didn't McDonald's have earnings? Oh yeah, I did it like a couple of candles ago. You can see it. I can see if tomorrow pre-market trades about this high, I can see this pushing into the daily 50 MA. So I'm gonna keep an eye on McDonald's. That's I like this. I like this one. I'm losing people by the minute. Tomorrow I'm gonna trade the hell out of this watch list, guys, and I'm gonna make some money, and then I'm gonna dance on their grapes. Triple M, hold the daily 20. I don't see a setup. Don't see a setup. Oh, I like that. There's a lot of 2 downs, 2 ups, strat reversals. XOM, Oxy, DVN, FCX. We're gonna look at that. XOM. Okay, I see why. This is probably looking for lower prices. CVX. Oh, as well as that one. There's a dumpster fire on CVX. And Oxy. Oxy as well. They'll look like they'll look shortable. So I'm gonna just put on the list oil shorts, oil possible short. And then we're gonna look at what did we say we have? FCX. What is FCX? Wasn't it Freeport? Nah, it doesn't look good. Just consolidating. PXD is oil. DVN is oil. DAL and CCL. So we're gonna look at Delta Airlines consolidating at the lows and CCL consolidating at the lows. So I think there's a lot of compression right here. I'm gonna keep an eye on this compression to be to have a solution. I highly doubt tomorrow. But we're gonna keep an eye on this. We're gonna keep an eye on this. Well, I like this compression, but I think you can go further down right because of the daily 20 once it catches up. So I'm not gonna waste more of your time. Thank you for sticking in, Iron Gland, and now loading. You guys are awesome. Other people suck. Nah, I'm just kidding. um, thank you for sticking in here, and I guess I'll see you guys next time.